AI just did something that is going to send these nuclear stocks to the moon. Now, what is happening is that AI needs a lot of power. These stocks that I'm about to show you are utility stocks that generate power that supports AI. We are seeing that those stocks are having very strong momentum. This is one of the strongest sectors in the market. This is also something you can learn. So if something primarily is going on like AI, then you have to think, what things does AI depend on? One of them is power. AI needs a lot of power. If you're enjoying this video and want to build financial freedom using the stock market, I put together a free guide called 10 chart patterns that make money. It's based on the exact system that we use at Profit Punch, a financial newsletter and educational hub that sends you A+ stock setups where we tell you exactly when to buy and sell, and also will teach you stock trading from the ground up. These are the same patterns that our members use to catch moves like SMCI 250%, NVDA 200%, UP11 350%. The guide is short, visual, and beginner friendly. Just click the link in the description or pinned comment to grab your free copy. Now back to the video. The first stock in this sector is NRG. You can see relative strength is 73. I thought it was going down. To my surprise, when the market recovered, NRG had a very strong move on earnings. These earnings look tricky for a lot of people, but this is actually a very good time to get in, especially when a stock gets out of a big base like this. You see all of this confusion where the stock was jumping up and down. It's always a good sign when it just jumps up like this, and then we can see on the weekly chart, it is having those tight wicks. That means no one is willing to sell this stock. If it was bad, then it would have come back down. But you have to ask yourself, why is it not coming back down? It's just forming these tight wicks, and after it jumps out of this, I'll be sending out an alert, and then you can go in for a swing trade or a long-term trade. The second best one that I love is GEV. Actually, this is showing the strongest price action. So you can see that was a swing trade. So here I was showing you base 1, base 2, and then after base 2 finished, now it has done a base 1 again. So you see these cycles keep repeating over again. This one has already jumped out, but I think it's going to set up for another move. This is the second best option. Then the third best options are TLN 65. I sent out an alert because it had a very nice base. Stocks in the same sector are likely to have very similar patterns. When you're confused about one stock and it's showing an iffy pattern, look at other stocks in the same sector. Then you'll likely know what is going to happen next. The next one is VST. It's forming a very nice base. Look at this long trend line. It has been broken. A trend line is trustworthy when it touches at least 3 points. We have a checkout down here. It's looking like it has a cup with a handle. I like the setup of VST a lot because it is looking very textbook, and this handle is in the upper third of the base. Once it jumps above this price and comes above 180, I would buy this because I think it's going to run for a while. And you can see the relative strength is still strong. Then lastly, one of the ones that I've been trading is OKLA. If we go to the latest part, you can see that it formed a very nice base. You see all of these low chits, then it comes and forms. Now this is what we call a handle, which is in the upper third of the base. Now this is where you buy. If you're a very long-term trader, riskier, you can start building your position from down here. By the time it breaks out here, you add your final position, and then you ride this thing above the 20-day exponential moving average. I actually entered here on the gap up because it had formed this mid-chit here. It jumped up the next day. I bought quickly. Currently, this one is up about 50% from the time I bought it. So these things move fast. You don't want to miss out on them.